Okay, you guys, how is everyone doing during this quarantine time? I hope you guys are doing well. I'm doing great, and I've also been doing a bunch of budgeting during quarantine times because everything's so irregular. If you guys don't know, my name is Elena Mays, and I am a current PhD candidate in mathematics. I also have my master's degree in applied math, and I just really love numbers and math. So budgeting is something that I've just been doing for myself naturally for the past at least 10 years, and probably more than that, just because I love numbers and I love to know where my money's going. So let's just get straight into it. Here is my budget. It's behind me here on the screen. My budget is very simple. It's inside of a Google Docs sheet, and it's just my budget. It has my income and it has my expenses. That's mainly what this is. So overall, a budget is knowing how much money you make each month and telling yourself where you're going to spend that money, every single last penny of that money. So that's how I view a budget, taking all the money that you make and knowing exactly where you're going to spend it, and more importantly, where you're going to not spend it. So up here in this column is my monthly income. And you can see for me, I have a couple of different sources of monthly income here. And then over here, I have how much that is. And this little projected thing is how much I would like to make in the future. And then I usually also have one extra column here that shows me my yearly salary altogether, but I kept that out of this one just to make it a little bit more cleaner. So these income sources right now are my income sources. So this is my monthly income from my job. This is not my household income. And also this is my budget from when I only had one mortgage, living in Maryland in our other home. And the reason why I wanted to show you this one is because this was my mortgage before right here, but this was the mortgage that I was in the goal that I was going to. So I have this projected column with different goals that I want to achieve at some point. That just kind of gives me a way of knowing, well, how much money do I need to make? How much work do I need to do to achieve these goals? And one more column that I wanted to tell you is this column that says percent income. And this is the percent of my income that this income source is generating. So income source A generates 55%, B is 31%, and my W-2 income, which is me working as a graduate assistant at my PhD program, generates 12%. The reason why I have that there is because I never really want one income source to generate way more than the other, and right now I do. One of my income sources is generating 55% of my income, and I would like that to be a little bit more like 25, 25, 25. Really realistically, if I had 10 income sources and they all were 10%, that would be awesome as well. So that's just there as a reminder of kind of where my money is coming from and how heavily I'm spending time on the source of income and how much it's making me. Just for a full disclaimer, these are not completely my actual numbers. Like, these are not my household numbers. Like I said, this is just the income that I pay myself from my businesses. So from business one, I pay myself $14,000. From business B, $8,000. If we go down underneath that, the next thing that I have is my retirement. I save 10% out of my monthly income or my retirement, and that's of my monthly self-employed income. So 10% of $22,000 is $2,200 automatically off the bat. I have my state tax here at 5.75%. At the beginning of the year, I figure out what my percentages are for all of my taxes, about what they could be, and round it just a little bit up, maybe 0.5% or something like that. So I'm saving for my self-employed taxes. So here I have my effective federal tax rate, which is what I think my tax rate will be after all of my deductions and expenses and everything. So that's 18%, and you can see that that matches up to $3,900 about monthly. Then I also have my Social Security tax. The max for Social Security is $17,000 a year, and I'm at that max for my monthly income. So that's the amount, $1,400. And then I have my Medicare, And Medicare is 2.9% of your income, but you also could possibly have an additional 0.9% Medicare tax when your whole entire household makes over $250,000. And then at the bottom, I have my tithe, which is also 10%. And that's 10% of of not just my income, but my income minus my retirement. Since right now I don't pay a tithe on my retirement, I plan to pay my tithe in my retirement, so I don't tithe on the savings money that goes into the retirement, if that makes sense to you guys. So after all of that, I have here in C12, I have my take-home pay. So my take-home pay is $13,414, and that's what I'm going to be using to work with all of my expenses that I have. So if you notice, like my actual pay that I paid myself for my business and from my job as a graduate assistant, it was about $25,000 a month, but after taxes, retirement, and tithing, my take-home pay is $13,000. Oh, real quick, before I go on, I just wanted to show you this graph right here. So this is the percentage of my gross income, meaning how much of my whole entire money that I make spent by each of the categories. So of my whole entire gross income, 46% is spent on my living expenses. About 20.9% of it goes into some type of savings, college savings, retirement. That's basically what that's car savings, vacation savings. 7.9% of it goes to the tithe. And that's a little bit lower than the 10% because like I said, I don't tithe on my retirement pay. So it's going to be a little bit less than 10%. And then taxes are about 25% of my gross income. So then I have my total expenses up top, and that's right around the same amount, $13,355. So I am expending and budgeting every single penny except for about $75, which I don't have accounted for. And then underneath it is something that I have to have as a part of my budget, and that is my basic necessities total. So this is like super important during the quarantine. How much money do I need to basically get in order to live on my basic necessities? Mortgage, utilities, car, my health insurance, my cell phone, my food. But this does not include my extra things like getting the kids' hair done, going to the gym, college savings, anything that I don't have to have for survival. And I love to know that number. If something happens, if hard times happens, I know I need $700 a month to still keep living. Do you know what I mean? So my house won't go away. So I'm not behind on my electric. And it's super important during the quarantine time that I know what that number is. Because if I think, hey, I have $13,000 worth of expenses, some of that stuff can actually be cut back when times is hard, okay? The next column we're gonna go through is house. So here I have my mortgage. I have that listed out. That's $1,746. That's the mortgage on my old home. Like I said, this is not up to date for my new home yet because I just wanted to show you a more basic version of my budget, if you want to call this basic. And I didn't want to have like all of these mortgages and all of these utility bills all in one document. So I wanted to spare you guys that. Inside of my mortgage, I have my house insurance, my taxes, and something called a shortage when you don't have enough money to pay these taxes. And all those are included in this number. I did have them broken down, but for this demonstrator, I just decided to include them. But if you want to, you can break them down. But I pay it all at once from my bank. Everything's included, so I have it as one. And right here, as you can see, I have the total amount I spend on my house or my mortgage or rent category here. And I have that for each column here. And I'll talk about why I did that later. Here I have my car. It's $120 a month for my payment, but actually I just paid my car off. So you'll see in the rows next to it that actually there is no car payment. So, but it used to be $120. I used to have two cars actually. So one of them came out on the 17th and one on the 28th. So I just have that little reminder there of when it's actually coming out from my bank account. And then I also have my car insurance that's due on the 18th. I have a reminder there. And that's a bi-yearly payment. So twice a year I make a payment, but every month I save for those two payments. So in my savings account and savings D, I do $200 a month. So I do $200 a month for 6 months. That will be $1,200 in the bank at the end of those 6 months. And I'll have that so I can make that by that twice a year payment. And I start doing that before I got a car, so that I would always basically be able to get the discount to pay twice a year so I don't have to pay monthly. So I just put all that money into that savings account, and then when it's time and they say, hey, your bill is due, I pay the bill with my credit card, and then I take the money, I transfer the money from my savings account to the credit card from that bank account that specifically has my car insurance payments in there. Now I use this technique a lot with different things when I want to pay in full. It's a really good technique. So before I want to do something, for example, like my kids go and dance, they have an option to pay in full. When you pay in full, you get 10% off. So what I did was, when I first started them in dance, I saved a little bit of extra money. Basically each month I doubled up, so that at the end of the year I had the money for the next year to pay in full, and then I was just ahead each year. So at the end of the year I would have saved all that money up, and then I would pay it to them for that year. Another good way of doing that is to, when you get a lump sum, let's say you get your tax money or any type of lump sum, put it into a bank account and use that to pay like things where you get a discount for paying one time. And basically that's like me making money, 10% of money, like easy. I just made 10%. So that's just how I look at it. So it's super important to me to make those payments in full. I've also done that with a lot of daycares. You know, if you pay in full, you might get 5% off or something like that. So always, I try to save up money so that I can pay in full, looking forward to the next year. Okay, so then I have my utilities column. I have my BG&E, which is $300 a month or about. That's an estimate. Sometimes it's more than that, but hopefully not. And I have a water bill that's $70 a month. I have my water construction bill. If you guys know, when you move into a new home, in a new development, not a new home, in a new community, sometimes they charge you for developing that community. So one of the things is they have to run water pipes underneath the ground in order to get us water. So we have to pay an extra $50 a month each month for 30 years until it's paid off. So that's the $50. And then my HOA fees on my other home is $92 a month. If you see here again, like I have checking, savings, where it goes to. So the water construction goes to a savings account because it's due at the beginning of the year. It's actually $600 a year, so I save $50 a month. My HOA fees come straight out of my checking account, and all of these, you see, all of these house, car, and utilities, they all come from checking F. So checking F for me is like where I pay my house, car, utilities, where I pay the things I need to survive. They all come out of that checking account. So that's for one checking account. Then I have another checking account that I use to pay for like my kids' daycare, the cleaner, things like that. Here I have my health insurance. Currently, when I had health insurance through my W-2 income, so my health insurance was $0. But I was predicting that eventually I'm going to graduate from my PhD program. Eventually I will have to pay some type of health insurance, and I looked into it and it costs $1,900. So I have that prediction there, and life insurance predicting is around $700, but it's good to have life insurance too, especially when you have such a high income. Like if something did ever happen to me or my husband, like it would be really hard to keep up with some of the payments. So life insurance is always a great thing to have on the parents of children, of young children, just in case anything ever happens to us. They'll still be able to live in a house, live somewhere, pay the mortgage on the house. You know, our mortgage isn't paid off. The electricity bills, go to school, etc. Because kids are expensive. Next, we have my cell phone and internet. Altogether, I paid $318 a month for them. I have my AT&T bill, which is $170 a month. That's me, my husband, and my daughter. And then I have my Verizon, and it's actually, this at the time, this was like what I said when I lived in my last house, my Verizon TV, phone, and internet bill was $148 a month. I thought these were really great conservative numbers for what we were paying for everyone. It was $318 a month. But actually, recently, I just dropped my internet to $39.99. I took away all the internet, and all the TV, so it's like $39. As you can see here, my AT&T, I have half is business use. So mainly I do use my phones for business, like 90% of it is only for business. But at least half of it is for business use, so I can expense that when it's time. And my internet also, 90% of my internet is business related. And so also that's kind of like a business bill, but I would still need internet if I was living at home, so I just have it here. Then I have my gas and my food, which is crazy high at $1,500 a month. And honestly, sometimes I spend more than this, but my gas is about $400 a month. Food is about $1,000, and household items that like toilet paper, toothpaste, toothbrushes, all that kid stuff. Those quick Target runs, I have $100, and that is really important that I keep it at under 100 because it's very quick that you can go inside of Target, Walmart, whatever, may need a field trip or something like that, money and things like that. That can get really high really quickly, so I really try to keep that extremely low and be very purposeful in how I spend money on household junk is what I really call it. All of those things I pay with my credit card. That's where it says credit card A here. And I also have in this column some goals, some projected things. So I knew we were going to move to California. I knew gas was going to be more expensive, so I have it as $600 instead of $400. And I thought that household items might be more expensive in the first couple of years of us living here, especially when you need to rebuy things that you don't have. So I maxed that up too. So here we have the daycare and our cleaning service, our housekeeping. It's $2,200 a month at the time. Ajay's preschool was $800. The nanny and the housekeeping, so that was for like the baby, and that's basically really baby and Audrey, and driving the kids back and forth at preschool was $1,260 a month that I was paying. We also had a cleaning service that would come in once a month at the time, and that was $160 a month. So all of that was $2,200. So this is my next highest, my most highest thing is my private school and college fund, $5,570 a month. $1,700 of it goes to Amaya's private schooling, and then $3,370 went to college savings, and that was actually only college savings for my oldest 4 daughters. And then I have this dance and special activities fund, which is $500 a month. And like I said, that goes straight into a savings account, and that's mainly for me to save up the money so that I can pay it in full, whatever activities, dance, violin, music, swimming lessons, all of that stuff that you guys have seen my kids do. I have a special fund, which I put money in there for in my savings. And then anytime that they want to do something, I put it in. And that fund is not like something that I started last year. I started this fund when Amaya was 3 years old. So I started saving money in it then, and I got it to a nice number that I wanted it so I could pay for her little ballet classes, mommy and me. And then over the years, I put more and more money into it. When I was working part-time, I put money into that savings fund, and it just was allowed me to get the girls and the activities that they wanted to by just having that there, saying, that's their money, that's where I wanted to stay, and that's what I want to use it for. So anytime that I would get a refund check, like when I was like 22 years old, I would get a refund check, I would put half of that in my kids' like special activities fund so that they could have time to do things. I wouldn't go out and like buy clothes. I would put honestly, I would put more than half. I would probably put 80% of it in and 20% to pay off some bill. And I would not buy like clothes. I would not buy like anything like that. I just put it all so that they could have the things I thought were important skills that they would need when they got older. So like that's literally where my money went. And I also would use the money for their college savings. I started saving when I was in my 21, even when I was 20, I started saving for my kids' college. And it wasn't a lot. It was like $20 here, $40 here, $50 here. But I mean, that was 14, 15 years ago. those little tiny bits of money that I put in back there have really grown exponentially in their accounts. I'm just grateful that I had the mind to do that at the time. I wasn't doing something ratchet. Debt payoff is my next one. This is like my most important one that I think that should be in everyone's budget. No matter if you have debt or not, just put it in there just in case you're gonna have it. I used to have at least 4 or 5 things I needed to pay off. Doctor's bills, 90% of the time it was some type of doctor's bill, my student loans, and that was basically it, doctor's bills. So down below, I have listed what my debts are, how much I owe, and what is the minimum payment, and how long it's going to take me to pay it off. Since I only have one thing, I have 3 years. I would like to pay it off in 3 years. How long does that take me? How much would I need to pay each month to pay that off in 3 years? Well, that would be $700. So my minimum payment for myself is $700. The true minimum payment is $300, and I need to know that in case something happens where I cannot make that $700 payment a month. Down here, I would do the same thing. Let's say I had a medical bill, just an example. If I had a medical bill, I would just put like the medical bill was, let's say it was $440. And let's say I wanted to pay it off in 4 months. I would do that. I would say 4 months. And then I would just go over here and I would just put equals 440 divided by 4. And I know I need to pay $110 a month on that payment. And I would fix that into my budget. And if that was 2 months for me, I would say, well, let me do it in 6 months. Well, that's, $73. That works for me. So that's how I used to do it. I would just insert more columns for whatever I needed to pay off. And sometimes I might pay something off, get extra money and pay something off in full, but sometimes I wouldn't. I would just keep that list. The last thing I have are my extras, and I have this at the bottom because they're not important, and I have my level of important things up top. So my extras is my LA Fitness membership. Sometimes I had a YMCA. That comes out on the 28th from my credit card. It's $19 a month, y'all. I got that, again, 15 years ago. I got that membership. It's still $19 a month, and I kept it. And when I need to go on a break, it goes down to $9 a month when I don't want to use it. I also have a vacation fund, which is $250 a month. A lot of times I don't make it into my vacation fund, my savings, but it's there if I need to. And then my car home repairs, this has to be in your budget. It's not just your car payment, it's not just your car insurance, but the car needs maintenance. For us, it's about $100 a month. So I have a fund in my savings D2 account where I put for my home and car repairs, things that may need to be fixed. New tires, windshield gets cracked, my house, something leaks. I have a fund for that, $100 a month. You can't do 100, do 20, do 25, anything. It really doesn't matter. These are just my personal numbers. Okay, so that's everything on my budget. And I just want you guys to take a look at this. These are my household expenses. This is the little graph I made. So these are my household expenses as a percentage of my take-home pay. So my take-home pay was at $13,000. And so you can see the majority of my money, 48% of it, is actually going to private school and college fund, which is good. I like to know that I'm not spending all of my money on stuff. Some of it I'm actually saving. And then my next biggest thing is the daycare and the cleaner. My next one is gas and food. And my next one is my debt payoff. Then I have everything there and I can see how much I'm spending. What you notice that you don't see in mine is you don't see a lot of things for me, like clothes or getting my nails done, getting my hair done, because I just don't spend money on that. I don't know. I don't think like when you have goals, when I have goals, I just don't do anything that's extra or that I consider that I don't really need. I do them myself. So I would do my own hair. I would do my own nails. I would do most of the things I want to do for me. And then when I hit certain goals, then I might say, okay, let's do this, let's do that. But even still, the majority of stuff I try to do for my own self, which is why I learned to cut my own hair. I know how to do hair. I know how to do a lot of the things that you would usually pay out someone for. That's basically my whole entire monthly budget of how I spend my money. What I didn't quite tell you is how I use that budget from month to month and how that changes with my self-employment income, with unexpected surprise charges. If you want me to do a video on that, since I think this one was really long, let me know. But just to sum up what I do, in each one of these columns each month, I put what my actual income is for that month, and I put what my actual expenses are. In some months, my actual expenses are more than my actual income. And I want to tell you about that in another video on how I can kind of shift where my money is going to cover that. Thank you guys for watching so much. Please give this video a thumbs up and share it with a friend or family member who you may think needs some budgeting motivation. And I hope this motivated you guys to sit down, look at your finances, put your money where you want it to be, and just have more control over your spending, your money, and the goals that you want to hit. Okay, thank you. Bye.